Hey everyone, let's do another review because things are getting a bit more interesting with the reaction to Western Digital and SNDK from yesterday. And even if those missed, we can see that SPY is up, pre-market, Qs is barely down 0.5%, IWM is flat, and the DIA is flat as well. And when we look at the heat map, we see some red in software and semis, mostly memory. The other ones are kind of flat. And we see a lot of green in healthcare. We see in staples, energy, and metals and everything in between. And I kind of think the market is preparing to rotate again, or it's been rotating for a while, but it it will push this into overdrive, and it will just ignore whatever the fuck semis do. And even if semis continue going down, I think the market will barely feel it. Like maybe we do minus 1 to 2% over 2 to 3 days, but which would be kind of small, like just a reconnect of the ribbon and then bounce higher, reconnect with a breakout point and then go higher. And first of all, let's look at semis with what happened, and I'll start with Western Digital because it kind of poses a risk to the entire market, to the memory trade, basically, not the market itself. So Western Digital, the problem with it is that we are getting to this horizontal level here, which has held as support 1, 2, 3. This is the fourth time. We're kind of oversold, and we generally have bounced from this level here. But if we break down, it becomes quite nasty. We have this head and shoulders kind of look here as well, which gives us a target much lower. But even if we don't take into account the head and shoulders pattern, we have a target to get to basically 300, and it's what's the downside from this level? So another 30% down from this level. And it's not the problem necessarily that Western Digital goes down. It's more of a problem that I think every memory name will follow eventually and will break down completely. And if Western Digital does not bounce strongly from this level today, I'm cutting the DRAM position and just waiting. And I'll wait a couple of days because I think this will, if this plays out, it will play out very fast. Like it might happen by the end of the week. What's not the end of the week? It's Thursday, but by mid next week it might be already be over. So another minus 30% in another 2 to 3 days is quite plausible. So it's a big level to watch. I expect it will bounce, but if it doesn't, it's quite bad for the memory trade and generally for semis and technology in general. Now, looking at SNDK, it doesn't have the same look. It's not that weak. It's basically still in a higher low compared to Western Digital. But even if that is so, it doesn't mean that it cannot continue dropping if basically the market, Western Digital will hold that level unless the market decides that it will not hold it. If the market decides it will not hold it, I don't think many of the memory names are safe, and I think they will break down as well. And it's down 10%, but I think it has another 20 to 25% downside to go from this level. So this is 20 to get to basically just under 900. And if we get this scenario, the bearish one, I think this is going to generate a very strong bounce. Once we get to the 900 area, I think we get a strong bounce, and that will be like this is like 70-80%. Let's assume we get 900, and we get like, yeah, 70%, 80%, something like this. So this is the bearish version that that is possible to get today. I don't think we will, but again, be prepared. But the simple version is that we bounce and we go higher. And I think this plays out. The only difference is this eventually happens, but the only difference is which version comes first. So basically, do we go to 1600 before breaking down, or do we first break down and then go to 1600 afterwards? And yeah, I don't know. And even like I said, even if this happens, based on flow activity and what happened yesterday, and what happened yesterday as a major thing was the gold breakout, is the market seems to be rotating into value once again. And it's not just gold, it's generally metals across the board. And we have XLB with a quite interesting setup. Like we had this long consolidation pennant here. We have a breakout from the first trend line that does not include the fake out from this level or the fake out from this level. And yesterday we broke out even above that level. And here as well, we kind of have two versions. One would be like a fake out sideways kind of move. Like basically we just retest the high, we go like to 55 and it becomes a fake out. Then we do this and just have more consolidation in the sideways pattern before eventually potentially going up and breaking out higher. But like I said, it's not just that. I posted CLF yesterday from the comparison with the SRC HRC features, and also looks good. We have AA, which again, these things have broken down severely since June. They all kind of look the same, like all the metal names. This is AA. We have Albemarle, kind of looks the same. This stopped in May and went downhill since then. So all the names that are NEM, which is gold, had a breakout yesterday or sort of a breakout. Let's not call it a breakout quite yet. Let's take this. I like it more like this, but it's still in the like margin of error area here. So and they're turning up. We could potentially like we have this constricting Bollingers even on gold, which we have begun to push upwards. And we've been in this long contraction phase, and now we're pushing upwards here. And this has quite a lot of potential to stick and keep going. And if you remember the last time we had stuff like XLB uh, pumping and XLP staples again, these things pumped. It was right before we got the war in Iran started, and it was a late stage kind of cycle warning signal thing that the market is on its last legs. When we interplay SPY on it, sorry. So yeah, this last leg here, SPY was kind of trending downwards and staples were going nuts. XLB, same kind of thing. So this last push that we got, it was right before the market corrected in a more meaningful way. And it seems very similar to that time here. The only difference is that SPY is going up right now. But if semis turn and technology turns and Max 7 turns, the only thing that will be keeping the market up is this value trades. And the value trades are basically healthcare. Let's go to ETF. So it's basically energy as well, but healthcare, which is up at near highs. We have utilities who have been kind of breaking down, but it's connected to the AI trade, but could potentially be turning down as the market starts thinking of them more as defensive. We have staples, which again I kind of look at this and see it more like a U pattern, like it's turning up. We have industrials as well, near highs. We have materials I just showed earlier, and so on. So these are the kind of the defensive names. And the fact that the market is basically flat with memory down this big kind of makes me assume we're gonna get the rotation thing. Plus, on top of this, I saw some flows that are on uh, what's it called? XLI and XLP. The fuck. So we have these puts on XLP and XLI. Actually, let's go directly to the source. So these are short put rolls. Basically, they went in for 8 million and exited for 2. and then took those profits and roll it higher. And again, this is a short put for 16 million. This one was for what? This is 8 million, exited for 2, 1.79, and reinvested 7 million in the short put. So I remember seeing this kind of activity when we were getting the pre-war moves in staples and in materials. And again, giving the same kind of vibes. So what is to look for here is basically what happens with memory. Do we get a bounce from, do we find buyers at these levels? Because if we do not find buyers, I would expect maybe Western Digital closes at minus 25%. SNDK closes like minus 15, maybe even a bit more, minus closer to minus 20. And again, I think it will continue down and just go to this super extreme oversold area where it has no choice but to bounce from like under 900. And when that happens, it will go higher, and we will still get like that 2 to 3 week squeeze that is the bear market rally. I don't think this was enough. This is too small to count as that type of bear market rally, even though the percentages are big. Like we had what, 33%, then we had 25, I think we have 40 right now, 50. But this is not still not big enough. Like to get the full bear market rally, what we would need to do is basically go to the other side of the Bollinger Band and something like this. So basically we are here. We went to the midpoint of the Bollinger Band and it looks like we're getting rejected here from the 21 EMA. But for the full bear market rally experience, we need to go to the other extreme and go to the other Bollinger Band. And this would happen basically later on, and sort of like this. We once again go here and then bounce and go to the other extreme and go to the other Bollinger Band, and we basically 1600 and then get rejected and do go even lower. So that's my take for now. Um, Based on what I'm seeing, the liquidity model is still more or less intact. Obviously, it's getting more sketchy as we get volatility from earnings and some instability because of the prints and the moves around that. But for now, like, mm, for example, the low here didn't happen as planned because we got those unexpected event with the Leopold short squeeze. So that could have gone lower, and we kind of didn't get finality. Maybe if that happened, we were at what, 737. Oh, sorry, that's SNDK. SNDK. So we were at what? We were at 1,000. Like, if that thing hadn't happened and the momentum would have continued, we would have gotten to the 900 level anyway. But because that thing happened, it caused us so more squeeze. Now we're getting rejected. Earnings didn't weren't to the market's liking, and we're still getting to the 900 level. So I don't consider this to be invalidated quite yet, although it could happen in the future. Just like we didn't have the chance to play it as expected, we got a disturbance in the force, let's say, and now we're just correcting that disturbance in the force and going to the 900 level. And this will change some dates around, but the spirit of the thing still stands, in my opinion. If that will not be the case in the future, I will call it out obviously. But for now, I think it's just like a disturbance because of external factors, and this should have gone to 900 in the first place. Had it continued going down for another 2 or 3 days, it probably would have hit 900. It was only 100 away, and then it would have a squeeze like no tomorrow, get to like 1600. So yeah, that's it for today. No weekend for the video. I hope it clarifies some things for you guys. Have a good one. Bye bye.